Good morning, everyone. It is Wednesday, October 26th. It's 8 o'clock in the morning, Eastern Time, and I'm just going to run through the morning charts. Here we've got the US dollar index, and more or less what's been unfolding the past several sessions is this falling wedge that we've been seeing, and we are also falling right down into a support zone, these previous peaks. So usually a falling wedge usually means you're going to get some type of a breakout outside of it. Now within this falling wedge we did have a even smaller falling wedge that more or less unfolded, and we did get a nice break and pop there, and it was that move here that really created that short play on crude oil, and we got a nice 7.5% gain in about 24 hours. Over the entire position we took about 3.5%, but now we're looking at a much larger wedge, and there's good potential for a bigger move to the upside, possibly back up to the 77.50 area. We'll have to see how that plays out. It might only go to the 77, which is right through the heart of this previous congestion and this previous kind of consolidation here. So we might only go up to that level. Either way, I think we're in store for a little bit of a bounce in the dollar, and that should move money into bonds and out of stocks. And we'll probably see commodities pull back a little bit too from the recent kind of breakouts to the upside. So let's just take a look at what's unfolding in the commodities. Here we've got the crude oil chart. This is a 4-hour chart. So you can see the 4-hour chart. It moves very similar to the daily chart. It allows you to look back several months, but you get to see all the intraday price action with it, along with volume kind of broken down in smaller segments. So you can see if there's clusters of buying or selling, whereas a daily chart just clumps all that information together, and it just gives you a big selling or buying day, which isn't always the best way to do it. So overall, what we have here is the crude oil chart. We've got a new trend line kind of moving up here, and overall we did have this small rising wedge originally, and it came right into this resistance zone. We did take the short play here, caught this move down for 7.5% gain in about 24 hours, and it did come right down to a key support zone, which is why we covered our position. Overall, with the uncertainty in the weekend coming, and the European decision, we ended up moving our stops fairly tight at break even or better. Got taken out the next day at break even, and from there we've seen crude oil break to the upside, which is one of the things I thought could definitely happen with the news, depending how it unfolded. And this morning we're seeing crude oil more or less just form this mini little pennant consolidation pattern, more or less. We did have some pretty good selling here. You can see yesterday we did get a nice little pullback. And looking at the US dollar chart, it looks as though the US dollar wants to have a little bit of a bounce, and if that happens, we'll likely see crude oil pull down probably into the 89.90 area, which will come right into the top here and act as support. And then from there we might actually be looking for a long entry, but we'll have to play that by ear once we see how things unfold going forward with the European decision and the FOMC meeting. So that's kind of where we stand for crude oil. We're just neutral on it, not looking to take a position right now. That being said, I just want to point out it has broken this previous major high, so I am anticipating prices to consolidate and likely either trade sideways or higher going forward. So I am more bullish now that we've broken this level. I wouldn't be shorting it. I'd be actually looking to maybe accumulate on the pullbacks if the price action and volume confirm that. Now looking at the gold chart, this is the 4-hour chart again, zooming back several months, and more or less yesterday we had a nice pop. Yesterday we saw precious metal stocks, they all jumped up fairly strong, even though the equities market pulled back on fairly high volume. It's kind of going to make you wonder what is going on overall with the decision, the FOMC. It could be some foreshadowing that the big money is moving into these safe havens, anticipating more money printing, and we're going to see those go higher. So we're going to keep our eyes on that. Overall, gold has broken this previous high, had some good volume surges, and we'll just see how things pan out over the next couple of days. It'd be nice to see a consolidator trade sideways for a little bit, and we'll possibly be looking for a long position. But overall, just looking at the chart, we did have that rising wedge. We did get that expected breakdown. It didn't come down to test the low, but we did have the break and it triggered some selling. And from there on, now we are trading up near these highs. You could redraw this and possibly bring it right through yesterday's price action, showing we are at resistance, and gold had a nice pop up into that level. So we could easily see it pull back if the US dollar has a bit of a rally today or later this week. So we'll just see how things kind of play out there. And there's a lot of uncertainty, headline news. So you got to be very cautious getting into these things. You can see gold, just one bar makes one huge move. You get caught on the wrong side, it can hurt pretty bad. So you got to be very cautious trading around news, which is what we are pretty much experiencing right now, is headline moving news. Looking at the silver chart, it's pretty much the same as gold. Had a nice move up yesterday. Again, it had this kind of rising wedge here, or this more of a pennant pattern that silver had, and overall it broke down a little bit and it's moved up to new highs with some good volume. Starting to show a couple little short-term topping tails where you see price run up, get sold right back down, ran up to a new high, got sold back down. Usually that's a sign, something like you see over here, that usually the market wants to pull back a bit. So we'll see how things kind of play out. If it comes back down to 32 level, we'll play it by year and maybe looking for a long position in silver. Next is bonds. This is the 60-minute chart of bonds. I'm just going to go to the 4 hour, so everything's on the same time frame. Hopefully it'll load up properly here. Okay, here's the 4 hour chart of bonds, and you can see we've had a huge run up. Prices become very unstable and choppy. That indicates usually you're getting near a top, and we had a nice move up in the last couple hours of yesterday. We had a strong push. We'll see if this spikes up and goes higher. Overall, I am looking to short bonds in the future, but again, that could completely change depending on what happens in the next week or two with the Fed and the European decision. So right now we're neutral. It's trading sideways. It's looking very toppy, where we had a big run initially with huge volume, and then we saw it continue to chop its way higher on volatility, on lower volume, and now we've seen a pretty strong pullback, and right now it's just kind of consolidating, trading sideways, and from there we're going to just see how things kind of play out. Not taking a position in bonds yet. Looking at the SP 500, this is the SPY ETF. This is the 10-minute chart, and we're zooming back about 1 month here. It just shows you the real short-term time frame. Overall, we had the market bottom down here, and we're seeing now equity prices more or less expand. I pointed out yesterday, pre-market, we were trading up at the top of the range, and the market was in an overbought condition using I pointed that out on the momentum indicators, and then we probably see some type of pullback and gap fill. Now we haven't got the gap fill yet, but we're coming right to that gap window. Here's that gap window. So we just came down to that gap, the edge of the gap window, which will act as support. There's also a previous pivot low there. So today we could see further move down to fill that gap and possibly even come back down to the bottom of this range. Now if you look at yesterday's volume, we had very strong selling pickup, and because it closed down near the lows for the day on strong volume, I'm anticipating we'll probably see some follow-through selling today, which will bring down and fill this gap window and possibly lower. So we're going to keep our eyes open for maybe a potential setup if we come down to the bottom of this range here to go long equities. Looking at the futures chart this morning of the SP 500, you can see, I'll just zoom into yesterday's price action. Okay, the high volume on the left-hand side of the screen, that is regular trading hours. If you're not used to looking at the futures chart, that's regular trading hours, 9:30 a.m. to 4 p.m. Eastern Time. That's when the masses are trading the market. And then after that, we had a strong sell-off into the close near the low, and in overnight trading, it traded sideways. And then this morning it started to move up and is holding up a little bit. But overall, if you just look at these key pivot levels On the left hand side, you've got this pivot low here, pivot low here. We had a breakdown, and then we had a pivot high here, which acts as resistance. And that's where we're trading right now, is we're stuck under this heavy volume resistance level. This pattern here is actually a fairly bullish one on a short-term basis. Again, it's pre-market, so you can't really judge it too much. But overall, I do feel as though it may even squeak up a little higher here into the middle of this trading range. But after that, we could end up getting some continued selling to fill the gap that we had a couple days ago. So just taking a quick look at the market momentum. This is the bar chart market momentum, and what I wanted to point out here, I showed this yesterday. Just let this page load here. If you click this little mini chart, which it doesn't seem to want to load. Let me just refresh this, see if it'll work. Okay, well anyways, what I saw on this market momentum chart, usually this shows us a chart if it's trading above 101, I consider overbought. If it's trading below 98, 99, I consider oversold. And yesterday, yesterday morning, it had closed from the previous day way up above the 101 areas at 102.80 something. So it was overbought. We were anticipating a pullback. And yesterday we got the strong pullback, and now it's actually minus 2 point something. I can't see it behind this get chart thing, but more or less we are now in an oversold condition, and you can just see how the market is flipping and flopping each day here with the volatility and the more or less fear and greed kind of running into the market and running out of the market. Same with the stocks trading over the 20-day period moving average. That is continuing to hold up above the 75 level. Okay, here's the bar chart indicator. What I was pointing out here was anything over the 101 I consider overbought. Anything under the 99 I consider oversold. Recent volatility has expanded those, but it still runs the same. It still means the same. So the previous day we saw it way up here, overbought. And we were trading at an upper band, upper resistance level, and yesterday we got that big sell-off, and now we're down into an oversold condition. So you can see how this really plays out really well with trying to find if a market is overbought or oversold.